Vladdy, yeah. So that silver position is up. That I gave on opening on closing playbook. I'm up 162% on that. But that was like a what was this? What was our drop? It was like 400%, right? I think. So yeah. So I think yeah. So we're at 42 now. Our limit, our good to cancel order is at one. So again, like 400 some percent. So
There
I'm
you go.
so I'm still in that. Pedro, insider intelligence is options and the underlying stocks. What makes it cool is that we trade options for the quicker gains, but the insiders themselves are just buying underlying shares of their own stock. And if they are a 10% or 10% board owner, they have to hold for 6 months. So we give you both choices to play. And the idea being that if they hold if an insider puts it like a couple milli down and they have to hold it for 6 months, they think the stock is going to go up. So so we give you both the ticker and the underlying stock. You can trade that if you want to. You can also trade the option for a little quicker gain, double up if you want, or you can just trade one or the other. It's really up to you. Um, yeah, James, I'm gonna hold you overnight. I mean, we got Jeff here, all about the metals, all about the commodities. We are in commodity heaven, honestly. I feel like this is gonna. I mean, that's the name of the game. And there's gonna be. I mean, there's still gonna be Nvidias and stuff too, but maybe more than we've seen in a long time. I mean, I'm really just any material that's well, really any material because they're all kind of vital to national security
Oh yeah.
are all gonna just we're going to a renaissance for this stuff. So
Did you see that battery maker dude, STI?
no, let's see. Whoa,
Check that out today.
that's crazy.
It went from like $10 to 25. I was just thought got to thinking a little bit ago after you had posted, the materials and all that good stuff. And I was just like, yeah, but man, that stuff's going into batteries. And I was like, who does batteries? And I was like, there's a place, I was like, STI or something like that. I check them out and I'm just like, well, lost that one.
Yeah, what's the daily chart look? Whoa,
Yeah, it's one spike.
that's crazy. I
I
mean, we
guess
could
everybody had the same thought I did, except they were earlier than me.
right. I mean, I mean, we're over the 200 now. I mean, it could be bullish. Maybe wait for a little bit of pullback. Maybe we'll trade this. I'm gonna put this on the watch list. Let's just keep an eye on it. Um, so I wanted to talk about some positions. I always forget what the hotkeys are for hot list. I'm trading. Okay. Um, okay, yeah, nice. STS. Hey, it's never Zoom user. I don't know what your name is, but it's never a bad idea to take money. I mean, that's why you trade, right? You haven't made any money until there's Blake. You haven't made any money until you cash out. It's all just paper stuff until you James, I can't give personalized financial advice. I will tell everyone here, I personally do not use stop losses on options. That's just
Agreed.
that's just me.
And
Me
me.
too. I don't
Okay.
use them.
All right. I'm glad I'm not the only one.
You're
So
not the only one. What's going on, guys? I'm
Well, the
back.
problem with putting a stop on options is right at the opening bell, the bid-ask spread's so wide you might get thumped.
yep.
And all of a sudden, you end up losing on your trade, and all of a sudden, you turn back around and the thing's above where you entered, and you're just like, "Dadgummit!" And so
Yeah.
I've never done that again.
Yeah. No, you know, psychologically, you shouldn't be position sizing to the point where you're afraid of losing max.
Right.
If you're terrified that if this thing goes to full loss, that you're going to be out on the streets, your position sizing has gone dramatically wrong. Don't do that. You should, every time you open an options position or any type of options trade, like be okay with max loss because that's going to help you sleep at night. And it also makes you a lot more of a confident trader, because you're not fretting. You're like, oh no, I've lost $20,000. Or whatever it is, and I've lost, my mortgage payments for the next 6 months. And what am I going to do now? And I'm going to try and make it back on this next trade. And that, look, I would say never, never risk more than you're willing to lose, and be okay with losing it all per trade. That's going to make you sleep well at night.
Yeah, I always think about I can't get up and go to the restroom, and my position's too big.
Right. I know, dude. I know. I'm like pulling out the old tennis ball can.
Yeah.
Yeah.
Uh,
Yeah,
yeah.
James, max, you never, the cool thing about a call put, you're never going to be paying more than you, or you're never going to be losing more than you paid for. So if you paid $100, you're never going to lose more than $100. Um, so there's a few positions I wanted to get to. So, all right, so our IBM position, I don't know what to do. I want to actually get Jeff's opinion on this. Our IBM filled the gap and it's selling off hard. Now, I know this has been a crazy, 2 days, but we're at 56%. I'm kind of thinking I just want to close it out because it's dipping below where our gap fill was. I don't know if you're seeing anything, Jeff.
No, I had a put spread on it and got hammered.
Oh, you did? Okay.
Yeah. So
All right. So you know what? We've had this position. I think the expiry is the 17th. Let's just go ahead and close this puppy out.
yeah.
I know we had a good to cancel order, so we're just going to go ahead and edit that. I'm going to try and get out. Let's see if we can get 173 for it.
Yeah, I thought I was going to try to get up to 300 and a little bit past 300, but it didn't do that.
Yeah. No, and it's dipped below the 9 again. It'll probably stabilize, I would think, but okay, I can get filled at 173. I don't feel like waiting. Let's get 171. All right, we'll just go 170. Now it's
I
at
mean, it hung on that 50-day moving average so well, it might be trying to go back to it.
that's kind of what I'm thinking. I would hate to see we were up, 80%, but
Yeah, exactly.
don't that's another thing psychologically too. I know that it's hard sometimes when you're up 80% and then you see it's 30% and you're like, let's get back to 80%. But sometimes it's better just to take that 30%.
Yeah, absolutely.
So I put it for 170. I think I'll wait for a while to get it going. MU, what's the expiration on this MU trade? That's the 31st of October. Let's look at what MU. Actually, I'll keep that one up because we can talk about batteries. We're talking about
That's the 92.5, 95, right?
yeah.
We're
Ooh,
on that.
I kind of like, yeah, we're up 31% now. I kind of like that. Big old downtrend. We have a consolidation pattern from an uptrend. We have like a pretty nice rejection here. We're going to hold on to that. We got days for it to play out. We're still holding on to silver. Cisco was up. It's down now. 17th of October.
We had MP.
Yeah, so MP is, did I get, am I
What's
still
crazy on that? We had an 87, 88 call spread, and it's at 97 right now. We're still not getting filled on the thing.
I know. I saw that. I was like, come on, dude, what's going on? And I'm pretty sure it's kind of stabilizing around there. We'll hold Cisco to tomorrow. Yeah, look at that. It's pretty stable today.
Yeah.
What is going on there? Maybe it's just it's not really thinly traded anymore.
No, not at all. Not at all. Oh.
Well, I'm not really, I think this is well, I'm not gonna get out of this. I don't know why we're not going. Yeah, I agree, Vladdy. I think 100 is a fair target for that. So we'll hold on tomorrow. Maybe after that, maybe things have been wonky. I don't know. Though honestly, it's not even with the sell-off, it wasn't that big of a sell-off. Things shouldn't be that wonky. I don't know why it's not getting filled for us. What's the contract price right now on that? It's 35 cents.
Yeah. It's like it hadn't even moved.
How's it not moved at all?
Exactly.
It was up. It has been it was up like I forget what percentage, like double digits today. So I think it's just kind of going back and forth. PBF, if anybody's holding that, let's go ahead and close that out. That didn't work out for us. I'm gonna go ahead and get out at 05.
Laura, we're not trying to get into MP. We're already in MP.
Yeah, that was from last week, Laura.
Yeah.
Yeah. Yeah, the PEP hasn't moved. The spread is down. Well, Bodine, the spread's down. The 157, 160. Where are we on Pep?
We're down $12. That's not
So
bad.
what's
We're in 48 and a half on Pepsi right now. We have a 157 and a half, 160.
Oh. Oh yeah, and that's for what's that? 7th of November? Oh yeah, I'm not too worried about that.
No, I'm not worried about that.
No, that's yeah, we're still, I mean, this is just I mean, I think it was consolidation almost, so we're gonna hold that. Um,
The only one I know of else is that iron. We sold that call spread.
yeah, so that's down a little bit, but
It's
it's
still a long ways off.
it's still, yeah, I don't, what was Iron doing today? Is that up sort of a little bit, but so we sold that put spread, or sorry, the bear call spread at 90, 95. So that's, yeah, we're not, don't, I'll, for this iron trade, I wouldn't look at the P&L on it because again, sometimes spreads can be wonky, credit spreads, which is what this is. But like, look how far away we are on this one. So now if we start approaching this, we'll reevaluate, but we have so far to go. And I think we're just gonna just hold on. I'm holding until tomorrow, probably. Um, uh, we came up, we've kind of just we sold off a little bit, but we're just kind of hanging in this band. I'm not seeing any significant downward pressure, and you can see that on the 1 day. Like it's like a hanging star, I guess. I don't know what it's technically called, but
Yeah, all these uranium guys I wouldn't get rid of.
yeah. So we're gonna keep on holding into this. I think we're heading into mineral mania.
Yeah.
So
Good old mineral mania, even after China. Seems like everything worked out with China over the weekend, huh?
This is a
crazy.
Trump market.
yeah.
That is a Trump market, isn't it?
Yeah. Yeah, the tweets. It's funny how he does it after hours.
I know. On a Sunday, he's like, everything's fine.
Yeah. Yeah.
What?
So I think we're gonna have some broader market recovery today. Ooh, Rich made 475 on Rich. Did you get filled on MP?
Let's go.
Dang it. Neither of us got filled. I don't know why.
What now?
That's yeah, Trump said G had a bad moment.
That's what he said. He was like,
Yeah.
he had a bad moment in time. He
Yeah.
regrets what he said.
Yeah, well, it's pretty crazy. I don't know. These people are playing. It's a high level game, man. Rigetti, Rigetti. I'm not sure. I haven't talked about Rigetti. Oh, Jody's doing NAC. Did you win on NAC this morning, Jody? Now we have more people here. I was showing off this to Crystal and a few of the others. Wow, we have a good showing today. Welcome everyone.
Yeah, we're filling up very nicely. I
Um,
think someone shouted you out, Alex, because of all these trades you're pumping out here.
it looks like it. Yeah, don't worry. We're gonna get to trades, FJ. Don't worry.
All part of the plan.
So this is the brand new. This is the brand new scanner. We got the devs to build it so you guys could use it.
Now, this is coming out this weekend?
Sunday,
Ah,
Ooh.
7 p.m.
awesome.
Be there. I'm actually flying down to Jacksonville. I'm gonna do it live. We're gonna reveal everything live. I'm gonna be on camera with Graham. I'm gonna hang out in his house.
Cool.
So, yeah. So
Trading house.
trade house.
That's right.
But yeah, I actually was trading with this today because I wanted to make sure that it was good. Like it matched all the data I was seeing on the thing I built too. We got NVTS from here. We got what did we get? What else did we trade today, ladies and gentlemen? NAC. Saw NAC come through. Oh, this was a miner we traded today. I don't even know what they do, but North American Northern Dynasty Minerals. You ever heard of them?
No, I have not.
They were up hard, 22% today. Oh yeah, and Peloton, we got a small gain on Peloton. Actually, Greg was telling me he held Peloton. We got out early. Um, but Peloton actually ripped all day long. Look at that.
Peloton's coming back to life?
I don't know, man. It's not a real company. Who has a Peloton? I don't have a Peloton. Don't want one either.
No.
Um, but yeah, this thing ripped. Greg made a couple hundy, he said. Andrew, how'd you do? Um, so oh, interesting. Bodine, gold newsletter from back in the day, 15 years ago. Interesting. Yeah. Um, well,
So that knack,
yep.
it
NAK.
has 1,840 mineral claims on 274 square miles in southwest Alaska.
Oh, okay. So we were talking last week about that big road that was
Yeah,
made in
exactly.
Alaska.
And they mine copper, gold, molybdenum, silver, and rhenium.
Don't know what any of that stuff does except gold and copper, but I know it's important.
Well, you've heard of chromoly and chromoly wheels and stuff like that.
No, what are those?
Oh, molybdenum makes steel harder and more shiny,
Mm.
kind of like
Oh,
chrome.
interesting.
So,
Okay.
yeah. But anyway, but of course there's copper, gold, and silver, and I don't know what this rhenium stuff does. Never heard of that one.
It's for the Area 51 stuff.
That's right.
The experimental aircraft.
What makes all the Marfa lights?
Yeah. Um, so let's see. Ooh, what? Oh, lack? Woo! Lack's up too. Oh yeah. It's a little bit of a sell-off after that extreme pop this morning, but yeah, that's looking good. Very cool. Very, very cool.
Right. Like, oh, lithium. Okay, cool.
Lithium, yeah, Lithium America. So the government took a stake in that too.
Aha.
Yeah. Um, oh, nice. Nice. David during a chrome plating shop part of his life. That's cool, man.
Awesome.
Very neat. Um, let's see what the talking heads are talking about real quick, shall we? Let's just see if there's any news we can. Oh, this is really interesting. I'm doing some research. Basically, the US just basically bought
Out
Argentina.
about their currency.
Yeah. Oh, yeah, we acquired like a whole South American nation states
Yeah.
sovereign finances. Um, that's pretty wild. We'll see. I'm doing I'm digging into all the
Yeah, I was listening to Besant over the weekend. He was basically saying, he goes, we are not, buying anything. He goes, all we're doing, he goes, we're just supporting their currency. He goes, it's just like any other trade that we do. He goes, but we're not loaning them any money. He goes, we're just supporting their currency. I was like, yeah, manipulating it.
right. Yeah, there's been a ton of stuff on FinTwit about this. It's very interesting, very complex. I need to do some more research before I can talk about it because
Oh yeah.
I'll sound like I won't be able to articulate anything effectively, but
Right.
it is very interesting.
Oh yeah. I mean, I'm not real big on currencies. I just know that when the dollar goes down, buy some other currency and it's going to be fine.
Yeah.
So,
Yeah, Bodine. Yeah, Argentina was one of the wealthiest countries well, I think maybe not ever as wealthy as Mexico. I don't know, but it was like in the top three in Latin America.
oh, well, Venezuela was smoking too
Yeah.
until they got taken over.
Yeah.
I mean, I was in Venezuela before then, and man, they have some of the best food down there. It's incredible.
Where?
in Venezuela.
You've been there?
And yeah, I've been there.
Oh, oil and oil for work and stuff?
Yeah, I spent time in Colombia and Venezuela working for Ecopetrol doing stuff. Um, I mean, it was kind of dangerous being down there because I had a $2 million price tag on my head, but besides that,
Really?
so yeah,
Why?
I mean, well, because all the fighters down there didn't want the government doing well at all. They were trying to,
Right.
offset the government. So, but yeah, I always had what they call police, but they're military guys with
Yeah.
me everywhere I went.
Yeah. Yeah. When I go to Mexico, especially Mexico City, there's always like the big Humvees with the dudes and the balaclavas and the assault rifles just
Yeah.
patrolling through the streets.
Yeah. And they call themselves the police. And I'm just like, right.
Yeah. Yeah. Yeah, it's dicey. It's dicey. Of course, the Venezuelan opposition leader won the Nobel Prize
Yeah.
and dedicated it to Trump. So that's even if Trump doesn't win it, he still wins. How do we get access to the Shindig Sunday? Yeah, James, I'm gonna be posting stuff. We're just waiting on like the registration page. Hopefully it'll be ready tomorrow. But just mark your calendar off for 7 p.m. Sunday night. It's October 19th, Sunday, 7 p.m. And I'll be getting you'll be seeing stuff about it, reminders and stuff. But just mark off your calendar so you don't forget it. Might as well do that right now. Yeah, I mean, so this is a pretty interesting. Today is interesting. I'm glad we didn't take any over weekend, like, call options just because it's been kind of a mixed day. Today is basically our weird flows and stuff. One thing I did see on my flow scanner is DJT. So, if we go over here, what does Solidian do? Before we get to DJT, they just like, what are they? Just like, what kind of battery tech? Solid state? So they say solid in the name. That's why I'm thinking solid state. I don't know.
Solidium.
But they're on the watch list. So this is a battery so batteries, metals, minerals, resources. Definitely bullish on those. Trump media. So these calls came in, and we didn't take this trade because we did like 3-4 trades like really early in the morning. So we were, sometimes it's just best to walk away. I had stuff to do. I had to put this training stuff together for people. But so on this scanner here, you can see that we have October 13th. Sorry, these expiration dates. That's the one thing the devs still have to change. This is the 17th. Something's off with the dating. But $17 calls for October 17th. So they came in at 11:58. This is what I'm saying. Look at this. 11:58 right here. And then look what happened. So it is actually peaking above or at least on the 3 minutes, peaking above the 200 moving average. I don't hate this for an overnight trade because we do have that Middle Eastern peace deal. I mean, things are going good for the Trump team right now. So I want to see, though, before we do that, if it's coming in on the sweep scanner and at what time. So it came in at 2:46. We just got another one. That was the early one. This is the later one for 17. So I mean, this could be we're gonna put this on the watch list for today, and we're gonna come back to it closer to market close, and see what happens. While we wait for these like last minute late day options flows to come in. I don't know. Was there any tickers I was gonna do this little options chain training today, Jeff. I don't know if you have any tickers, or we can look at tickers. But I thought it might be a good little mix up just to do a little training material. And unless you want to look at something a lot, and we can do that too. I'm happy either way.
Well, I know we meant to do that Friday and we never got to it.
Okay,
And on the auction chain.
Yeah.
And just because we got to look at a bunch of other stuff. But I mean, there's some stocks today that are, I mean, look at, BE Bloom Energy. I mean, it's like
Oh yeah.
smoking. I mean,
1%. This is insane.
I know. I mean,
So
there's a bunch of these though today. And let's see what else was other. Your Oklo, of course, there's that one. Got to always
yeah.
have that one. And but
That,
there's another one that I was kind of looking at. I mean, it's SYM.
Peloton's done. SYM. Oh, Symbot. I've heard of this. What do they do?
Symbotic.
Yeah.
They do, I mean, machinery for specialty machinery for industry and stuff like that. And I think they're into mining.
Okay.
Maybe it's batteries. I forget what it is, but I know they do machinery stuff for all of that. But I think it's up somewhere around 10% today or something like that.
Yeah, let me go ahead and get rid of push this over here. Yeah, 10, almost 10%, just under it actually.
Yeah.
Nothing on the flows. Oh, robotics. Devanshi says Sim is robotics.
Ah, there it is.
Yeah. Well, you were kind of right.
That's machinery.
Yeah. Cool. Yeah. Well, let's get to this options chain because when I launched this, what are you talking about there, Ramadan? Sorry, I don't know the context of that.
You're good, Alex. So basically, he was asking. He's like, "Do you guys mostly trade, options and stuff?" And I was like, "Yeah, we do a lot of spreads, calls and stuff like that." But he only trades shares. So I'm saying if
Oh,
you want, you can take the shares instead, and
right.
just exit when you give the alert. That's what he was basically saying.
Right. I mean, that's why we do options because, shares can go up 0.5%, but the option will go up 15%, 20% more or whatever. So,
Exactly.
let's go. So we got these flows coming in, but just getting ahead of this launch, right? We're going to be trading options. You need to know how to read an options chain because it's what you're going to be using this with this scanner. You're going to be spending a lot of time in here. And I think even if you're sort of a veteran trader, you might be able to get something out of this. But especially if you're a newer trader looking to understand options better, this is going to be good. It doesn't take long, so we'll still have plenty of time to get into the end of day trades and then what Jeff's got teed up for us, which is really cool. So what is an options chain? Everybody can see the screen. So basically an options chain is a list of all available call and put options for a stock at different strike prices and at different expirations. Now this shows real-time data for pricing, volume, and open interest, and among other things, which we're going to get to. Now, I love the options chain. You should love it too, or learn to love it if you want to trade, because it is a really good trading roadmap. It tells you a lot, and we're going to go into what it all can show you. So on the left is calls, right? That means you want the stock to go up. On the right is puts. That means you want the stock to go down. At these rows here, you can see you have different strike prices. These are all the different strike prices of the option, right? 41, 41 and a half, 42, 42 and a half, etc. Now in the columns, you have different stuff. You have the bid ask, you have the pricing, open interest, volume, you have the Greeks data right here. You see this. This is all in Thinkorswim, by the way. I use Thinkorswim. The layout will look different if you use another brokerage. But the names, they all have the same information. It'll all be virtually the same. It just might look a little different, but you'll still be able to access all this information. These concepts can apply to whatever you trade on, Robinhood, Fidelity, whatever. What are some of the key columns you'll see? So probably the most important is the bid-ask spread. This is what buyers are willing to pay versus what sellers want. The bid is what buyers are willing to pay. The ask is what the sellers are willing to sell it for. You can see here on this Peloton contract, they're willing to pay 14 cents. Sellers are willing to sell it for 18 cents. Okay, so over here it's 22 cents for the bid, it's 31 cents for the ask. Now you can also see some of the fundamental stock info on this options chain, which is really cool, which is why I say it's such a wealth of information just on this options chain alone. You can see the last price that the stock you're looking at traded at. So in this case for Peloton, back when I took this screen cap, it was about $7.36. Volume is how many contracts traded today on the stock shares, right? How many shares of Peloton traded today or that day when I took the screen? 4.1 million. Open interest. How many contracts currently exist? Now, this open interest measure, these are the contracts that were traded yesterday. Okay, so if I took this on a Tuesday, when you see this open interest at the $7.50 strike price, so let's say this was a Tuesday, the Monday, right, at that $7.50 strike price, Monday, the day before, 1,837 contracts were traded on Peloton for the 10th October expiration date at 7.5, right, at 7.5 strike. Volume is how many are closed or traded today. So that's today. So if it's Tuesday, this represents Monday's numbers. This represents Tuesday's numbers, right? Volume and open interest are very important to me in the way I trade. They should be important to you. They're important to basically any options trader as well. Again, volume equals activity today. Open interest is total contracts outstanding, i.e. contracts traded yesterday. Now, high volume and high open interest, that equals a liquid tradable option. Look at Apple, one of the most traded companies in the world. Tons of both open interest and volume, a ton at many different strike prices as well, both on the calls and on the put side. Now, if you see a stock with high volume plus low OI, which is open interest, like you see here back to Peloton, you see here when I took the screen cap, we had 2,402 new contracts being traded on Peloton today. You only had 385 contracts traded on Peloton yesterday. So what would that might tell you? Well, it might tell you that smart money is making a move, right? There's a lot of new activity being executed at a certain strike price. Why? Why are they doing that? Why are they opening up all these new contracts when there isn't like hardly anything yesterday? Now, you'll also be able to see Greeks, and the Greeks are more advanced, but we're just going to do a brief overview, and I don't think it's going to be too hard for people to understand. We'll also go into more in-depth explanations of each of these in future trainings, but we're going to start with delta here first. Delta is the sensitivity to the stock price moving, right? It's also a probability of in the money. It's a proxy for probability in the money. So I'll explain what all that means. So if delta equals 0.5 and the stock moves $1, the option gains 50 cents in value. So let's go back here before we jump to the next Greek. So you look at here on Peloton at this $7.50 strike price. You can see that the delta was 39 cents or 39. So for every dollar that Peloton were to move up, this options contract would gain 39 cents in value. So if you bought it at 12 cents, it would gain what? It would turn into what? 51 cents for if Peloton moved up $1. Now, this is also you can also use this as a probability of profit calculator. Note, probability does not equal guaranteed outcome. So for instance, if you were to go down here to 15, right? 15 delta, which would be the $8 call, let's go back a week. Let's go back to last Monday. So for this expiration on the 10th of October, you have basically only a 15% chance of Peloton moving up to $8 by expiration, which was last Friday. Which means, conversely, what? You also have an 85% chance of it not hitting $8. So you can use delta, especially when you're selling spreads. The way I trade spreads is I look at these probability of profits. I trade 30 deltas, which basically means I have like somewhere between a 70 to 75% chance probability of profit on each spread. Gamma. Gamma measures how much delta changes when the stock price moves $1. So if gamma equals 0.05 and delta equals 0.5, after a $1 move, delta becomes 0.55. The option gets more sensitive to price changes. You can actually see an acceleration effect on how fast the option can gain value as the stock goes higher or lower, but we're just going to focus on the higher because it's easier to conceptualize for a lot of people, including me. You can think of delta like the speed. Gamma is like the acceleration of an option price. Now, theta, we've talked about this before. Theta is time decay. It's the rent you pay daily just to trade that option, to hold that option in your account. Theta is, you can see, is a negative number for both calls and puts, right? Because every time you open an option, whether it's a call or a put, you're losing value immediately. So that's why you need strong moves in the underlying to make the option price gain in value faster than just losing value due to theta decay. If theta equals negative 0.06, the options price will drop about 6 cents per day. All else equal, if theta was in a vacuum, right? So Vega is the next one. This measures how much the option price changes for every 1% change in implied volatility. You can see here on Peloton, 0, which is because we're far away from earnings. There's nothing really happening. But you will see, especially as stocks approach earnings, that this Vega will start to tick higher and higher. If Vega is 0.1, right, and IV rises by about 5%, the option price increases by about 50 cents. So you just take the Vega that you see here, you multiply it by the percentage change in the option, by the percentage change of the IV. So if IV increases by 5, multiply it by 0.1, you get a 50-cent rise, right, in the option price. Vega is going to be strongest here for at-the-money options and longer dated options. In other words, it's how sensitive your option is to volatility swings. Rho is also a Greek. It measures sensitivity to interest rate changes. I don't care. I've never looked at it. Most people, I've never met someone who does look at it. I don't. Do you look at Rho ever? Jeff?
I know how to spell it.
Right. I don't. It doesn't matter. Nobody cares about Rho. It's the redheaded stepchild of the Greeks.
Right.
I'm sure somebody does. Like quants probably care about it, but it's not. It's doesn't really matter for us.
I bet you the bond guys use it, but I don't know.
Yeah, that's probably true. Actually, that has to be true because that's all.
Right.
It's right.
Exactly.
So, but it doesn't really matter. Don't worry about it. But it is there, just so you know that all the Greeks. Now, I mentioned implied volatility. I'm sure you guys have heard about this, but what is it exactly? Well, implied volatility represents the market's expectation of future price movement. You can see here on this little option statistics chart, the implied volatility, and I think this was for Peloton, was 85% the day I took the screen cap. You might be thinking, well, that's pretty high, but actually it's not. It's only in the 33rd percentile of volatility for Peloton. This is the current IV percentile, right? It's pretty low actually. Now a higher IV equals more uncertainty, thus pricier options, while a lower IV equals a calmer market and cheaper options. How it affects price. How does IV affect price? Well, it's via the Greek Vega, right? When IV rises, option prices increase because Vega adds value. If you remember that, Vega is basically the Vega measurement times the percentage change in IV, right? As option prices increase, Vega will add value to the options price. However, when IV drops, because of that same equation, the option price will decrease. So let's say an options Vega is 0.12. Let's say IV falls by 10% after earnings. The option loses $1.20 in value, right? Because you have the Vega times the percentage change, 1.12 times 10. $1.20 in value is lost on that option automatically just from that IV crush, which is what it's called after earnings, after big events. So, Fed's coming up, right? The earnings are coming up. Everybody's uncertain. We don't know if they're going to say we're raising interest rates 7%, 70 basis points. We're going to go Volcker 70s, or earnings are coming out. Nobody knows if PepsiCo is going to release 0 sales or what, right? Nobody knows. This is a volatile environment. Hence, IV, implied volatility, will increase before that event. However, after the event, there's no uncertainty anymore, at least around that event, right? So IV collapses because that uncertainty has been pulled out of the options market. Now, this crushes the option value. And this is why playing calls and puts around earnings, you got to be really good at gambling because you can be right. You can be right that Rocket Lab will move up $10. You can buy the exact strike price that it hits after earnings, but you can still actually make zero money, make only a tiny bit, or even actually lose money on that options trade because the IV crush was so significant that it deleted so much value from your option that it just basically doesn't work out. So that's why it's really hard to play calls and puts, regular calls and puts around earnings because of this IV crush effect. So put call skew. Skew, what is this? Skew describes how the implied volatility differs between puts and calls at different strike prices, and thus the prices of those options contracts. So higher IV again equals higher prices. Now, in simple terms, this means puts cost a little more because big money, right? They're always hedging risk. You know, the guys that they have to, remain neutral or just are legally required, or just because they don't want to blow up their accounts, they have to always plan to the downside a little bit. So that's why you'll see here on the Apple, look at this. We're at the same strike distance from at the money. So we've just been up two strikes out of the money, 2 strikes out of the money. But you can see here that the call side actually is cheaper. 192 bid, 194 ask, then the equivalent put contracts at 224 and 227. It's 30 cents more for the puts. Why? Well, insurance premium, right? You pay a premium for insurance. It's normal to have puts be a little more expensive than calls. That's just how it is. Call skew is going to be rare, where calls actually cost more than where the calls cost more than puts. It's actually really rare. You rarely see it, maybe sometimes only on meme stocks. Now, liquidity and spreads, this is a key concept. So bid-ask spread. You've probably heard this thrown around, right? What is the bid-ask spread? Well, it's the difference between the bid right here and the ask right here. You see the bid is 274. This is on Apple. And the ask is 276. So on Apple, it's a very liquid stock again. So the bid-ask spread is always going to be tight, which means you can basically enter and exit when you want to at the price that you want to, but as long as it's somewhat in the realm of, rationality. However, let's look at another tick. I don't even know what EQT does. I do know that it's an unknown stock and, hardly anybody trades it, which is why there is a wide bid-ask spread. You can see the bid here is 37 cents. The ask is 53 cents. So it's 16 cents different. So that means versus Apple, 2 cent difference, 2 cent spread, 16 cent spread. There's less agreements between the buyers and the sellers, between the bid and the ask, of to what the price of this thing should really be, right? It's a more opaque, less liquid market. Now, this can make it harder to enter, harder to exit at the price you want to. So, maybe on your P&L, if you open a trade on EQT, it says you're up 20%, but you go to get filled at that and you can't get out, and you can only get filled at 10%, or maybe you can only get filled at the price that would be equivalent to a 5% or 3% gain. That's the risk of wide bid-ask spreads. Now, a rule of thumb for bid-ask spreads is look for ones that are penny or nickel spreads. So 1 cent to 5 cents difference means it's pretty liquid. It's easy to get out. It's easy to enter. It's easy to get out. You're going to get a fair pricing. The pricing is more transparent with these tighter bid-ask spreads of a penny or a nickel. Now, common noob mistakes, right? What are some of the common mistakes people make? Well, one, they confuse volume with open interest, right? Again, volume is different. It's the contracts opened today. Open interest, high open interest doesn't actually signal anything that's happening in now, right? It signals what happened yesterday, but doesn't signal anything that happened now. So if you go into a options chain, you see 50,000 contracts were on open interest for Peloton yesterday. So did you take the trade yesterday? No, you probably didn't, which means it doesn't really matter to you. Now, if you go into the options chain and you see yesterday, 200 contracts were traded on that strike on Peloton. Today, 50,000 contracts have been traded on that strike at Peloton on volume, right? 50,000, because volume is today's activity, 50,000 versus 200, 300 yesterday. That means that something's happening. Why are so many people versus yesterday flowing in to this options contract right now? Could be a sign of a big move coming. Could be a sign of smart money moving forward with the trade. So pay attention to that. We talked about this big new mistake, ignoring IV crush around earnings. It's going to be really hard to play regular calls and puts ahead of earnings. New mistake number 3 is trading those liquid contracts with huge spreads. It's just hard. So you have a lot to overcome. You have to be so right. It has to be such an outrageously large move that even the IV crush can't contain the increase in price of that option. So like if the expected move is $5, it's got to move like $15 for that IV crush not to just eat all the profit away from your option. If it only moves $5, it's basically priced in. You're not going to really win. And then delta, like we mentioned, delta is a probability of profit. If you have a 20 delta, that means let's say you have let's go higher because we're not doing spreads. We're doing regular long calls and puts. Let's say you have a 70 delta, which means you have a 70% chance of that option finishing in the money by expiration. 30% chance of it not. Well, guess what? That doesn't mean anything. It's just a probability. And it does mean something in the context of your trading because like you want to take the trades that will give you a higher probability of profit usually, right? But it doesn't mean that that's just because it's 70% chance of profit, that it's a 70% guaranteed chance of profit. It could still go the other way and you could still lose. That 30% could actually be the one that you get on that trade, the 30% chance of a loss. Because I've never actually figured out a way to statistically, I've the argument, everything is like a 50-50 shot, right? You can play the probabilities, but in the end of the day, it either does what you want or it doesn't. 50-50 chance of it working out. So that's options chain quick start guide for noobs. Does anybody have any questions about that? Omar, yeah, this is recorded. I am going to publish this. This is going to be on the YouTube channel, and I'm also going to have it in some of my training stuff for the scanner because we're going to be looking at a lot of obviously options, right? So you need to understand how the options chain works. Yeah. So I don't know. Did I miss anything, Jeff? Anything important?
No, that was really, really good. I want to kind of show you something here if you want to see something kind of cool.
Yeah, let me share. I'll stop sharing.
Yeah, let me grab this. So I have a scan inside my software. And you notice it's all these are all calls down at the bottom are all the puts.
Oh, nice.
And what this does, we grab this big old document from a company called Delta Neutral. It grabs all the options that basically exist from the CBOE. And so we filter it all out because they're going to be options that have no volume or anything like that. But what we do is we look at these options. Of course, each report has it, and we just accumulate the data. But what we do is we look for the average volume and look for a increase of 300%, basically 3 times the volume. And if it does that, it pops it into this report. Now, unlike yours, this doesn't tell you if they're selling the calls or if they're buying the calls. It just says the volume in this option has gone up. And you'll notice if you look at like NVIDIA options, it's got huge volume in it. So that's going to be, that's 15,000 contracts minimum when that thing spiked up.
Yeah.
So this gives you a real quick look. And I look at this first thing in the morning because this is all based off of yesterday's data. Okay, these are the options getting traded on these stocks. So the question is why? And so I always go and pull up the stock. There's some of these things you're not going to even heard of before. I mean, I don't know what this BBAI thing is.
Oh, that's Big Bear.
Yeah.
Big Bear, yeah.
And then there's a BitF, which is of course Bitcoin. But there's some stuff in here I would look at and go, I don't know about that. But that's the one thing that I always have a difficult time doing is saying, hey, they're buying this call or they're selling this call. Because a lot of times you'll be trading at, let's just say, 98, and they're doing this week's 100 call. Well, they're probably selling the stupid thing,
Right.
because they're not going to get a huge move out of it. But if we're at, if it's a bunch of volume on the 100 call and we're trading, we closed yesterday at 150 cents or whatever it is, they're probably buying the thing, expecting it to move up. So that's kind of how I look at it.
What's that last column?
This is the average volume over 5 days.
Oh, okay, cool.
So we grab that average volume, and then we see each day if we can ever get a spike up in volume, because that means there's more
Yeah.
interest in it.
Yeah.
And that's what this does. And I don't think, I mean, we created this, I don't know, probably about 2 years ago. And I don't think anybody really uses it. But I look at it every morning just because I want to see what options are being bought or what ones have the most active on them.
That's very cool.
And what's that?
I said that's very cool.
Yeah. So, but one thing I like about your scanner is it tells you if they're buying them or selling them. That's the thing that's really cool about yours. So,
Yeah, I saw some of these tickers show up on my scanner today at Bros. I saw. It's interesting.
yeah.
Yeah. Very
But
cool.
but yeah, this is, I mean, that's kind of the stuff I look at in the mornings as opposed to having a cool scanner like you do.
I think the scanner's cool too, man.
So, but I mean, it is something for me to just sit there and go, okay, why are they buying, 250 calls on this BYND, That's
Hmm.
beyond something, probably beyond meat, who knows?
Yeah,
But
it is.
but I mean, that's the one thing I always kind of look at, and I just thought, well, since you're talking about options and volume and everything like that, that's basically what this one does. It just looks strictly at the volume only, and
Very cool.
accumulates that each and every day for 5 days. So
Yeah, no, that's super and that's what I'm saying. Like, so the options market it used to be like I would say, I it's the tail wagging the dog. You can almost think about now. Like the options market has so much power over stock prices just
right,
because of the proliferation of zero DTE, one DTE, weeklies, monthly, all this stuff, right? So if you're not paying attention to the options chain, you really are making an uphill battle for yourself. Um, you used to be you start with a stock, you look at the option. Sometimes you can do that, but I will say I think it's higher validity signals if you look at the options chain, you figure out how to study the options chain, and then you turn it to the stock and see if the stock aligns with what you're seeing in the options market. That's what I do with the scanner every day.
right,
You know, like if I see calls coming in, and the stock is down 10%, I'm like, I don't know, right? But if I see the stock seems to be bouncing off of a good, if I see the flows come in, I look at the stock and it's like, oh, it's clearly bouncing off of a support line. Like, what's going on? Let's get
right.
in. That's that's a good signal. And so we have a couple of questions here about bid ask spreads. So the first one, who asked that? Henry? Yeah, so Henry, the spread between the bid and the ask, it's set. You're not going to affect it. It's set by the market makers and by the big players in the arena. Um, so your individual retail traders like us don't have any say over it. But that being said, you do want to look. You tend to want to look for if you're less experienced, especially look for tighter bid ask spreads. It's going to make your life a lot easier. And we had another question from Zoom user. I still don't know your name. A tighter spread versus a wider spread. So a tighter spread is what is the difference between a tighter spread and a wider spread? Let me see if I can show you here.
Here, oh, stop.
Okay, so this is a good example. Look at this. We're gonna go look at two stocks, okay? So we're gonna look at this is PBF, right? We're gonna look at let's look at this. So this week's expiration, 15 cents, right, on PBF. This is the bid, this is a wide spread, right? Remember that it's the penny to nickel rule. Penny, 1 cent to nickel, 5 cents. This is 15 cents. It's neither a penny nor a nickel. In fact, it's no currency that humanity knows of. There's no 15-cent currency. So it's wide. Now, what if we go to Apple though? Look at this. 218 and 216 and 218 now. 2 cents away. So that is the rule. That's the 2 cents, right? Anywhere from a penny to a nickel is considered a tight bid ask. Anything wider than that is considered a wide bid ask. And this will make it easier to enter and exit. It makes the options, it means the option market is more transparent. For this particular ticker, it's going to be easier for you to exit. Sandy, gamma is the acceleration of delta. So if you look at delta, well, the last question, and we gotta look at these flows because we got this then Jeff's going to do the SICK training too. So delta is basically, if you look at this Apple, right? If you took the 252.50 Apple, I didn't know that, Greg. Interesting. Learn new things every day. If you look at, if Apple moves up $1 in price, this contract will move up 29 cents in price. Okay, that's delta. Now gamma is the acceleration of that. So basically, if gamma is 5 cents, 0.05 right now, and Apple moves up $1, after that, delta, the rate of delta increase, the rate of delta will increase to 34 cents. So now this delta is increasing, right? Now this makes sense, right? Because if you can see the delta is higher on these in the money, at the money options. How does that happen? How does the delta get higher? Well, because if it never changed, these would never be higher. It has to change. The gamma is how the delta changes for in the moneyness. You can see that, right? You can see, did everybody see this? How it's 56 here, 42 here, 29 here. As Apple moves up, this number, this 29 is going to increase closer and closer to somewhere around, 40 cents, 50 cents, or whatever, because of gamma. It's the acceleration of the delta change. Delta is, what did I say? It's like the gas velocity, and gamma is the acceleration. Henry, do you start any price that meets the spread? Cheaper, better. You should try and get the lowest price you can for the option. So if you're trying to open an Apple contract, you should try and do 212. When we trade these options with high volume corresponding to lower open interest, so when volume is really spiking up, for instance, if you look at Peloton today, so $20,000, 20,767 new contracts are traded versus 3,547 from Friday. Sometimes what's cool is you can get in for a cheaper price than what the bid is saying. You can get in for 16 cents because it's just the way it works. To be honest, I'm not quite sure why it works, but I have found that trading the strategy that I trade with my scanner, I'm oftentimes able to get in for a cheaper price than the bid, which means I'm also giving myself an extra couple percentage points of cushion on the profit. So pretty cool, right? Now, that being said, it's 3:30. I want to get to, we're having these late day flows starting to come in. I think we're going to probably see another green day today. Let's look at what's coming in at the late minutes. Let's see if anything looks good. Just for a second. I'm going to keep on scanning this after Jeff starts his training, and I'll send it out on my Telegram. So if you're not on my Telegram, sign up if you want these overnight flows. We're going to be, we target like double, triple digit winners with these. We're basically looking for these big sweep orders that come in late in the market, in the waning hours of the market day, because like, why are people dropping so many contracts? My thesis is, why are people, and it's been working out so far, why are people dropping so many big contracts and orders at the end of the market when they're not going to be able to really do anything with it until at least tomorrow. So let's see if we have anything. I don't see anything so far. We'll scan for like 2 minutes, but again, sign up because Jeff's going to get into his thing here in like 2 minutes, and I'm going to keep on scanning while we approach market close. The closer we get, the more high conviction. We get to 345, 350, 10 minutes before the market closes. And I'm like, you see like a $50,000 worth of, or 50,000 contracts worth of new orders come in. It's like, why are you doing that? So I'm going to be looking.
That's big money doing that.
It is big money. And they're making a big bet because they're not going to be dropping that stuff for nothing. So I don't see anything. These purples are high conviction. Jeremy, yeah. Show up to Sunday at 7 p.m. We'll show you everything.
And I'll have a link too to send out tomorrow so everybody can sign up and get pre-registered for that too.
Yeah.
Because we want everybody there. And then I just put your Telegram in the chat too, so everybody can join that. That way they don't miss the trades you're going to put out if you see anything before close.
Yeah. Telegram is the best way to keep in contact. I send all my trades out there. You're still going to get these for free until we launch. The rest of the week, you get all these free trades. So this is the time to join if you want some free trades.
That's right.
Okay, so look at this. So you see this doesn't really work on the tickers. I don't trade ETFs.
Oh, we
ETF
can't see your screen, by the way.
Oh man, dang it! I was trying to be so cool. QQQ. I don't trade the ETFs because they're too liquid. 22,000 contracts on ETF on an ETF like QQQ might seem like a lot. You see that big number, you're like, oh my god. Look at how many contracts are on QQQ in a normal day. But you start seeing some on Pinterest coming in late. This is a good one. So Pinterest, MOSS, MSOS. Those are two I'm going to watch. Join the Telegram. I'll see if these hit my criteria before market closes. But I want to get into oh, Jeremy had the week, dude. I love it. I love it that you were so ready though. No, I'm sorry, man. It's next week, Sunday, the 19th at 7 p.m. So 4 p.m. your time. But hope to see you there, my man. So let's get in. Jeff's got something really cool that I love. I want to get into that. I'm gonna keep on scanning, but let's get started.
Let's do it. Great time for it too.
It is.
It is.
Actually, it's always a good time. It's always a good time to trade gold. Who am I kidding?
It ain't going away, folks.
No.
It's not going away.
Even on Friday, everyone was like, oh gosh, gold is down. Ha ha. Look what that was. A buying opportunity.
Yeah.
It's exactly what it was. I was trying to time it the best I could on Thursday, and I took a little heat, but got paid.
There you go.
All that matters.
That's right.
Let's grab this here. There we go.